All right, moving on in the modern financial markets, endowments, pension funds, family office, and also the sovereign wealth funds are driving the outlook of markets, and few insights about the sizes of these funds. The U.S. endowments alone sized $700 billion global family offices about $6 trillion, sovereign wealth funds sized around $12 trillion, and hedge funds around $3.6 trillion, and combined together approximately $22 trillion and counting. Today we'll be discussing about these major players investing their funds. Joining us this morning is Sean Said, Chief Economist of JYIQI. Sean, good morning. Thank you so much for joining us this morning, Sean. With greater economic challenges right now, where those more those with cash in hand stand to win in the event of crisis. Share your insights about where endowments, are parking their funds in USA, and also what trends can we see?
Yes, endowments is a huge business in US. I've worked partially raising funds for University of Chicago, and endowment is, especially the Harvard endowment, is the largest with $41 billion. Followed by Yale at 37, Stanford at again 37, and Princeton at $27 billion. So combined together, these four endowments are contributing immensely in the financial markets in US. Traditionally speaking, all these endowments have been investing in stocks, bonds, and cash. But Harvard was the first one in 2003 that invested in New Zealand farmland, because one of the alums from Harvard Business School convinced the Harvard management company that manages the endowment to invest in New Zealand farmland. And as you know, New Zealand is quite active in the farming industry. In 2003, they invested, and in 2011, they offloaded the investment. Fast forward, in 2018, again, Harvard endowment went into alternative asset class, which is real estate, and they invested $5 billion in Hong Kong real estate. It was managed by Bain Capital. Again, it was managed by one of the alums from Harvard Business School. So I think moving forward, we will see more and more endowments moving away from traditional investment and going into alternative investment, that is real estate, farmland, arts, private equity, gold, and other private equity investments. So I think moving forward, we will see more and more endowments, which are quite big, will be playing a major role in the global financial markets.
All right, Sean, so the game comes down to traditional versus alternative investment. So how do you foresee family office role with $6 trillion of asset under management moving into alternative of asset classes?
Yes, Nina, if you recall, 2nd April 2021, Financial Times ran a series of articles in which they discussed family offices. Nobody is talking about, but family offices, again, they carry immense value in the financial market because they're controlling $6 trillion. And in the last 1 year, we have seen more and more family offices setting up in Dubai, Monaco, Singapore, Hong Kong, London, New York. So I think, again, they are moving away from traditional asset classes and they are going into real estate. They are parking funds in private equity. They are parking funds in arts. Arts is a major investment. They are parking funds in gold. So I think more and more family offices, which are undervalued, they are not being considered. But I think moving forward, we foresee at JYIQI that family offices, they will play a major role in alternative asset classes. Even Citibank ran a series of surveys last October, and one of the major themes that came out of those surveys was, that family offices are more interested in going into digital assets. They are more interested in parking funds in technology, real estate, shopping malls, data center, warehouses. So I think, again, family offices will be driving one of the key variables in the global financial markets moving forward.
Yeah, Sean, pension funds like, CalPERS and also Ontario Teachers Pension Plan are huge with their investment size, in terms of their investment size. But where are they parking funds? Are global investors, looking for yields right now?
Yes, absolutely. The global investors are looking for yields, and especially CalPERS, which manages around $477 billion. Last year, they made a profit of 21.3%. And CalPER and Ontario, these major funds, again, when they come into the market, they create a major impact, So apart from traditional investment, one of the key themes that CalPERS has done, they're investing heavily into a real estate market, which is quite attractive at the moment. And if you look at, I have shared with you many times, in the stagflationary environment, tangible assets make a key theme for these pension funds, for these hedge funds, sovereign wealth funds, and family offices. So I think real estate has become the new global currency. And I think we foresee more and more investment coming from pension funds, moving away from equities and bonds because they continue to stay volatile. So I think tangible assets will remain the theme for the next 3 to 5 years.
Shan, finally, how do you foresee Asian market leveraging from these major players as plenty of liquidity floating around? Is the market getting ready for this investment? What's your perspective, Shan?
Yes, Nina, if you recall, in the last 1 month or so, Qatar Investment Authority and Singapore's sovereign wealth fund, GIC, have been in the news. Qatar Investment Authority has invested in Japanese offices, 32 Japanese offices. And again, GIC, the Singapore Sovereign Wealth Fund, they have invested in the London student rental market, tantamount to £3 billion. It clearly shows that the sovereign wealth funds are looking at Asia and those industries and those countries where the returns are quite attractive, where they find strong returns, and where they find safety of capital. But Asia remains the growth story, and I wouldn't be surprised in the next 3 to 5 years, major sovereign wealth funds would be parking their funds in Asia, and Asia is on the global investors' radar.
All right, Shan, thank you so much for joining us this morning. That is Shan Said, the Chief Economist of JOI, explaining to us about the endowments and where are they basically parking their funds in the events of crisis and also during the economic challenges right now.